Executive Summary Company, Freshpet Inc. FRPT produces and sells refrigerated fresh pet food. Recent performance snapshot, FY 2024 revenue approximately equals $975 meters plus 27% Y. With net income turning positive, thesis leader in premium fresh pet food niche with strong retail presence, earnings improving but growth slowing in 2025. Management cut sales guidance. Investment case rests on growth plus margin expansion versus execution risk. 1. Company overview and business model products. Refrigerated fresh pet food dog and cat. In trays, rolls, and fresh treats. Distribution, grocery, pet specialty, mass retailers, and e-commerce. Freshpet finances and installs refrigeration units in stores. Economics. High fixed costs. Manufacturing. Cold logistics. But premium pricing and brand loyalty support margins. 2. Industry and market position. U.S. pet food market. Within the $150 billion plus pet care sector, refrigerated segment is small but fast-growing. Positioning. First mover and category leader in refrigerated fresh pet food, with strong brand awareness and shelf presence. 3. Revenue streams. Sales of refrigerated pet food through retailers, adjacent products, fresh treats, incremental revenue from case placements. Growth trend. Strong in 2024, slower in 2025 with reduced guidance. 4. Competitive advantages, refrigerated retail footprint. Proprietary cold cases act as barriers to entry. Brand loyalty. High repeat purchase rates among pet owners. Vertically integrated supply chain. Own production and cold chain capabilities. 5. Scalability growth drivers. Expansion of in-store cases, new households, product innovation, international expansion. Constraints. Refrigeration rollout and manufacturing scale require heavy CapEx. Management cut CapEx guidance in 2025-6. Financial statement analysis, income statement highlights. 2024 revenue. $975 million plus 27%. YY. 2024 net income. $47 million versus prior year loss. Q2 2025. Revenue $265 million plus 12.5%. YY. Net income $1.16M. Balance sheet positive operating cash flow and improved profitability in 2024. Enterprise value $3B. Ongoing working capital tied to refrigerated inventory. Cash flow operating cash flow improved in 2024. EBITDA margins expanding. CapEx trimmed in 2025 to preserve liquidity. 7. Key valuation metrics, market cap. Approximately equals 2.7 billion PE, trailing. Approximately 84x forward, PE. Approximately 30x. Price sales. Approximately 2.7x. EV/EBITDA, elevated versus traditional consumer staples, reflecting growth premium. 8. Growth potential and TAM. U.S. pet food market is huge. Refrigerated segment remains unpenetrated. Upside from household penetration, new product lines, and retailer expansion. Management reduced 2025 sales outlook and long-term revenue targets. 9. Competitor landscape, large players. Mars, Purina, JM, Smucker Hills. Control most of the pet food aisle. Direct threats. Other fresh entrants, smaller premium brands, and retailer private label initiatives. 10. Management and governance. CEO, Billy Sear. Management credited with driving distribution and margin improvement. Governance. Strong institutional ownership and broad analyst coverage. CapEx and growth strategy under close investor watch. 11. Risks market. Weak consumer spending may reduce premium pet food demand. Company specific. Dependence on refrigeration economics, execution of marketing ROI, and manufacturing efficiency. Competition. Risk of rivals or retailer private labels eroding Freshpet's growth. Supply chain. Exposure to energy and input costs. 12. Dividends and shareholder returns. no dividend. Capital reinvested in growth initiatives. 13. Insider and institutional activity analyst coverage is broad. Sentiment has shifted as growth slowed. Recent price target cuts and rating downgrades. Institutional ownership is significant. Potential for activist interest. 14. Technical analysis signals share price volatile in 2025. Hitting new 52-week lows after guidance cuts. Earnings-related volume spikes are common. Momentum bearish year to date, despite some earnings beats. 15. Recent analyst ratings in news Q2 2025 beat EBITDA expectations, but reduced sales and CapEx guidance. Analysts lowered price targets with some downgrades to hold or sell. Management reaffirmed EBITDA targets, but growth trajectory questioned. 16. Red flags and watch list. Sales growth slowed down in 2025. CapEx reduction indicates tighter cash control. Effectiveness of increased marketing spend must be proven. Margin sensitivity to energy and ingredient costs. Analyst sentiment turning cautious. 17. Investment conclusion, investor fit. Growth-focused investors willing to accept volatility and premium valuation. Bull case. Sustained penetration growth, margin expansion, and improved efficiency support earnings and multiple re-rating. Bear case. Growth slowdown continues, competition intensifies, and valuation compresses further. Quick one-page snapshot ticker, FRPT. 2024 revenue, net income, $975 million. Tilde $47 million Q2 2025 revenue. Tilde $265M plus 12.5%. Why? Market cap approximately equals $2.7 billion valuation. PS approximately 2.7x. Forward PE approximately 30x. Catalysts: retail penetration, margin expansion, marketing ROI risks, slowing demand, competition, high CapEx logistics costs,